Welcome back to the Ultimate Trading Podcast. I'm Isabel Maria, and today we are closing this series of essential trading tips with one that is both simple and profound: staying prepared. In financial markets, preparation is not just a nice-to-have, it is a necessity. It is what separates traders who survive turbulence from those who are swept away by it. Markets are unpredictable. Trends shift in an instant, volatility spikes without warning, and unexpected events can send shockwaves across every asset class. The prepared trader doesn't panic. The prepared trader has a plan. To understand why preparation matters, think about the two sides of trading. On one side, there is opportunity, the potential to capitalize on market movements. To enter at the right moment and exit with profit. On the other side, there is risk, the possibility of unexpected losses, sudden market swings, or adverse events that threaten your capital. Staying prepared allows you to manage both sides effectively. Preparation mitigates risks, creates the ability to act decisively when opportunities arise, and ensures that decisions are driven by strategy, not emotion. Being prepared means more than knowing market trends or having technical indicators at your fingertips. It means having a robust trading plan that outlines how you will approach every market scenario, including the most adverse conditions. A well-defined plan provides structure and discipline. When markets are calm, preparation ensures that you are ready to act without hesitation. When markets are volatile, preparation prevents fear and uncertainty from dictating your decisions. At the heart of a strong trading plan is thorough market analysis. Understanding the macroeconomic environment, keeping track of geopolitical events, and analyzing historical data gives you context for your decisions. Both technical and fundamental analysis are crucial. Technical analysis helps you identify trends, entry points, and risk levels, while fundamental analysis gives insight into the forces shaping the market. By combining these perspectives, you gain a holistic understanding that informs every trade. Risk management is equally essential in preparation. A prepared trader never leaves capital exposed unnecessarily. Stop-loss orders protect against catastrophic losses, position sizing ensures no single trade can compromise your portfolio, and diversification spreads risk across assets that behave differently under stress. A well-prepared trader considers correlations between assets, monitors leverage carefully, and always knows the maximum potential loss on every position. Preparation transforms risk from a threat into a manageable component of strategy. Contingency planning is another critical aspect. Markets do not follow schedules, and crises do not announce themselves in advance. Events such as economic shocks, central bank interventions, geopolitical tensions, or even global pandemics can create extreme market conditions. A prepared trader anticipates these scenarios and has predefined responses. These responses might include scaling back positions, reallocating capital to safer assets, or adjusting trading strategies to protect profits and reduce exposure. Preparation ensures that you are not reacting in panic, but acting with purpose. Entry and exit strategies must also be refined in advance. Knowing where you will enter a trade, under what conditions you will exit, and what profit or loss levels are acceptable is critical. Predefined criteria prevent impulsive decisions that often erode capital. A prepared trader does not chase the market. They follow a structured plan that allows them to seize opportunities while limiting downside risk. Regular review and adjustment of your plan is the final piece of preparation. Markets evolve constantly, and yesterday's plan may not be sufficient today. By continually assessing performance, analyzing what worked and what did not, and making adjustments, traders ensure that their plan remains relevant and effective. Preparation is not static, it is a living process of adaptation and refinement. Consider the real-world example of John, an experienced currency trader focused on the euro to US dollar pair. John developed a comprehensive trading plan well before the COVID-19 pandemic hit the markets. He regularly conducted market analysis, tracked economic indicators, monitored central bank policies, and evaluated geopolitical developments. This analysis allowed him to gauge market conditions, anticipate potential volatility, and identify key levels for entries and exits. When news of the pandemic began to unfold in early 2020, John did not panic. He implemented his risk management strategies, setting stop-loss orders on every trade and diversifying his portfolio with other currency pairs, gold, and government bonds. As volatility intensified, John activated his contingency plans, reducing position sizes to limit exposure and increasing allocation to safe haven assets. By adjusting entry and exit strategies to reflect wider price swings, he maintained discipline while capturing opportunities in short-term intraday moves. Throughout the crisis, John continuously reviewed his plan, analyzing the effectiveness of his adjustments and reallocating capital to more stable currency pairs when necessary. His preparedness allowed him not only to preserve capital but even to achieve modest gains, while many traders suffered heavy losses. The lesson is clear: preparation allows you to navigate uncertainty, maintain control, and act decisively in the face of extreme conditions. Staying prepared is more than a mechanical process, it is a mindset. It requires discipline, foresight, and a commitment to constant vigilance. A trader who is prepared has confidence, but not arrogance. They understand that markets are dynamic and that flexibility is essential. By integrating thorough analysis, risk management, contingency planning, clear entry and exit strategies, and ongoing review into a single coherent approach, traders equip themselves to respond to any scenario with calm and clarity. Preparation also supports emotional resilience. When markets move unexpectedly, the prepared trader does not panic or overreact. They follow their plan, trusting that it has been designed to handle uncertainty. This confidence allows for rational decision-making, even in the most volatile conditions. By contrast, traders who fail to prepare often succumb to fear, make impulsive decisions, and experience significant losses. The takeaway from Tip 50 is simple but profound: in trading, preparation is everything. It is the foundation upon which all successful strategies are built. By developing a robust trading plan, implementing risk management practices, anticipating adverse conditions, defining entry and exit points, and regularly reviewing performance, traders create a framework for long-term success. The case study of John demonstrates that even during unprecedented market events like the COVID-19 pandemic, preparation can protect capital and enable disciplined gains. As you reflect on this final tip, consider your own approach. Are you truly prepared for the unexpected? Do you have a plan that accounts for risk, volatility, and market shocks? If not, take the time to build one. Preparation is not a one-time task, it is a continuous commitment. It is the difference between surviving the markets and thriving in them. By staying prepared, traders can navigate uncertainty, seize opportunities, and achieve consistent, sustainable success in the complex world of financial markets. Before we conclude this chapter on risk management, remember that risk management is not an isolated task. It is the backbone of your trading journey. Position sizing, stop losses, take profit strategies, understanding volatility, leverage management, diversification, risk-reward assessment, limiting exposure, regular review, and preparedness all work together to form a resilient framework. Successful traders are not those who predict every market move, they are those who survive, adapt, and capitalize on opportunities while controlling risk. By internalizing these 10 principles, documenting your processes, and practicing disciplined execution, you can elevate your trading performance, protect your capital, and achieve sustainable, long-term success in financial markets. Trading is a marathon, not a sprint. Surviving and thriving requires preparation, discipline, and consistent application of sound risk management strategies. Apply these tips, reflect on your performance regularly, and adjust your strategies as the markets evolve. By embracing risk management as a mindset rather than a checklist, you transform uncertainty into opportunity and position yourself for success no matter what the markets bring.
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading!